Yes, Mohsin. Is that how you pronounce your name? Mohsin. Yes, we are recording. I just hit the record button, so it is being recorded right now. All right. Okay. Let me do one more thing. I'm going to make this a little bit bigger so we can see my screen a little bit better. There you go. Okay. How's that? Hopefully, you guys now can see this better. Excellent. Okay. Well, again, welcome. Yes, that is correct. Everybody on this call, so Motion is asking a question. Would he be able to get a recording of this? Yes. So everybody on this call will be able to get a recording of this presentation, this webinar. Absolutely. And so thank you so much for being on this call today. One of the things that we have been trying to do is change the way we have been doing business as far as our teaching and coaching is concerned. And so you guys are really honestly the first group of people to partake in our very first series. Okay. So you guys have a treat, so to speak, because the prices that I will be charging going forward is going to be a whole lot much more than this. You guys are actually helping me put my material together. So that's why you guys are getting in for a discounted price like you are today. And so we are trying to update a lot of our content that we've had from a while back. And you guys will be helping me with that. So I hope you don't mind. If you don't want my whatever you have to say being on our video, then I guess you would just have to be quiet, but please do understand that tonight's recording is going to be made available not just for yourself, but for other people who are going to be purchasing this. But I can guarantee you this one thing is that anybody else that purchases this will be paying a whole lot more than what you guys are going to be purchasing. So you guys, for taking the first step, are in a treat. Okay. So I'm going to be revealing a lot of new content. Some of them might be still old content to some of you guys, depending on how long you've been with me, on how much you know about my material. But I will be revealing a few concepts that is completely new that I know I have not shared with too much of anybody except for people who are in my coaching program. So for those of you guys who are in my coaching program, you'll probably know some of this stuff that I'm talking about. Excuse me. But for the rest of you guys, this would hopefully be new content that would open your eyes to seeing how you can trade. Okay. So tonight's content is about seeing market bottoms. But in addition to that, I'll be showing you guys how to use the VIX to see market bottoms. Okay. So that's the plan. And then we'll be including indicators to help you enter your trades and even exit some of your trades as well too. Okay. So that's the plan for today. Please feel free to ask any questions that you have along the way. If it's a question that I believe is inappropriate for today's webinar, I would just let you know. I'm not a rude person, so you don't have to worry about me being rude. But I would just let you know, okay, hey, we'll cover that in another session or another course or something like that. That's all I say. But I don't want you guys to shy away from asking questions. Okay, so please feel free to ask as many questions as you choose to. If I do not answer your question, please do not be offended. It's simply either one or two things. Either one, I skipped it, I didn't see it, or two, I didn't want to get distracted, and I would probably contact you back via email on whatever questions you had. Okay, so please don't get offended if you see this. Okay, or if you ask a question and for some reason I don't answer. All right, but by all means, please feel free to ask questions. So let's get started. Market bottoms, market bottoms, market bottoms. Now you guys were able to see a little bit, but let's just go ahead and dive in. One of the biggest things that I noticed in 2018 with all the coaching that I did and all the training that I did was that the strategies is really not the issue, more so than it is the mindset that people have and the discipline that people have regarding trading. You can go on YouTube anytime and you'll see tons of strategies out there. It works for some people, it doesn't work for a lot of other people. The only question is, I truly believe it all comes down to what is your goal? What is your mindset? How much patience do you have? And are you able to execute a trade without emotions? And that's really what it comes down to. But today I'll be showing you a couple of strategies. But at the end of the day, please understand that strategies is just one leg of being a successful trader. There are other parts of being a successful trader that you also have to have. So it is for that reason that I do not do stock picks. I don't believe in stock picks, so you will not see me recommend any stock picks. I like people doing their own analysis. I like learning from seeing how we can analyze a chart and then place our trades based off of that. One of the things that you will also learn is that a lot of people think about a trade as a win or loss based on whether they made money or not. That is something that I came to realize in 2018 that it's hurting a lot of traders out there. Is that if they lose money, they consider it a loss. I see people who will contact me saying, "Oh yeah, I made money and I'm so excited. Thank you, thank you, thank you," which is always good. But then when they lose money, then they get all sad and depressed. And I realized that, they again, it was the wrong focus. And what I mean by that is people focus on the money. And don't get me wrong, we're all here to make money. But focusing on the money is not as important as making sure that you have a viable system. Okay. And that's one of the things that I wanted to do in 2019 is talk to people more about putting a system together. And what I mean by that is when you place a trade, you should not be excited whether you make money or whether you lose money. Now, it sounds like a foreign concept, but you shouldn't be excited whether you made money or you lost money. I believe that the excitement should come from the fact that you executed the trade exactly according to plan. That should be what excites you. Okay, let me repeat that one more time. And if you have to write this down, do so, please. You should not be excited about whether you made money or not. I mean, and most people get excited when they make money. They get sad when they lose money. Okay, you should not be excited because you made money when it comes to trading. If you do, then there's still a lot of work you have to do on your emotional aspect of being a trader. If you get excited about making money, like you place a trade and you made money and now you're all excited about it, then you're missing the point. I truly believe that in order for you to be a successful trader, you have to take the emotions away. I say be excited that you actually have a system that is consistent. And when I say consistent, most people think, oh, consistent meaning that I'm only making profits. No, the key here is that you're making profits more than you're losing. But even when you have to take a loss, the loss is a small amount. I can't tell you how many times people see a trade. They know they should be out of that trade, but they still stay in hopes that it will reverse when the system is already telling them get out. And so that's some of the things that we're going to be learning today. Okay, I'm going to be showing you guys these things. If you can get to that point where you stop focusing on the money and you start focusing more on the system that you have in place and whether the system is telling you to stay in the trade or get out of the trade, and you follow it to a T, then you'll find that you'll be more successful in trading than not. Okay, so that's my 2 cents as far as that is concerned. And then we'll keep on jumping in. So let's get started with how we start analyzing charts. So one of the first things that I believe is hurting a lot of people, excuse me, hold on one second. Okay, I'm back. All right, so one of the things that is hurting a lot of people in being able to identify market bottoms is that they don't know what indicators to use. Okay, you've heard me talk about patterns. You've heard me talking about candlestick reversal signals, which are all important. But the one thing I didn't talk about previously was indicators. So let me show you what indicator I use. It's a very common indicator. It's the stochastic indicator. Now, most people have heard me, who's followed me for a while, know me and my stochastic indicator, how much I love stochastic indicator. Um, I would say that I believe I am the king of stochastic indicator now. I don't think there's anybody that knows how to use stochastic and the power of the stochastic indicator out there as much as I do. I laugh every time I hear people say that a stochastic indicator is a lagging indicator. I laugh every single time I hear that now. Every time I hear anybody say, oh, yeah, stochastic indicator is a lagging indicator, I know that they don't know what they are talking about. It's as simple as that. Now, also, I laugh when I hear people say, oh, all indicators are lagging because they all follow price action. I say again, they have no idea. None. Like on a scale of 1 to 10, 10 being like you're an expert, 1 being like you're a novice, they are like on a scale of, minus, a 0.5 when they say, oh, all indicators follows price action. The truth is, yes, it does. But that statement tells you that their mind is shut off from seeing the power of what indicators can do. So I hope that you guys do not shut off your minds to seeing the power of indicators. And let me show you guys how this can really help change your trading going forward. All right. So here is a 1-year chart. One of the first things, and when I look at market bottoms, and what I like to do, and regardless of whether there's a stock or whether it's the market itself, I like to start with the market itself. One of the first things that I do is I like to look at the daily chart. So for those of you guys who are intraday traders, I apologize up front right now. I am more of a swing trader and a longer term investor. Okay. So I focus on the daily chart, the weekly chart, and the monthly chart. But you can still apply these same things to a smaller time frame. It's just that I cannot give you thumbs up or thumbs down on anything smaller than a daily chart because I don't trade that. So I don't focus on those smaller time frames. Make sense? Okay. Um, So what I'm going to show you here is whenever I pull up any chart, and like I said, I always start with the S&P 500 to kind of give me an idea of where the market is. One of the first things I always do, and this is like probably the biggest secret, I'm going to just show you guys right now. The biggest thing is using a stochastic indicator to tell me whether we're at the top or the bottom. Okay, whether we're at the top or the bottom. So a stochastic indicator simply does one job. It tells me whether the market is at the top or if the market or that stock is at the bottom. Simple as that. Nothing more, nothing less. Okay. Now I know what people might say. Oh yeah, it's a cyclical indicator. I've heard it all. I don't care about what any of that stuff says. All I care about is what does the stochastic indicator do for me? And what it does for me, it allows me to identify when a stock is at the bottom or at the top. Okay. Now we'll explore this a little bit more, but let me just show you a very simple concept that would literally change the way you've been trading if you understand this concept. Now, we can see here, and this is something that a lot of people don't understand. This is the last year. This is 12 months. Give me 1 second. Hold on 1 second, guys. I am burning up over here. Let me turn my AC up. Hold on. Okay, I'm back. All right. Are you guys still with me? Please give me a Y just to make sure you guys are still with me. Give me a Y if you guys. Okay, good. All right. So we got people here still. All right. So one of the first things is this is a concept that most people have no idea about. And again, I say be open minded because people, oh yes, it's I've heard this before. I know. And one of the things I always say is like, you don't need AC in Canada. I know, right? Yeah, I'm in Florida over here. We burning up over here. But one of the things everybody says, oh, I know. And I say, if you know, then how come you're not making money off of it? Okay. And here's the thing. You go to a 1-year chart and it's a very simple concept, especially on the S&P 500. What I want you guys to pay attention to is this. Notice how we had stochastic at the bottom, 1, 2, 3, 4, 5, 6, 7. Okay. 7 times in the last 12 months. Now, I guarantee you, we can go back even you can go back to the 2000, the whole year of 2017, and you'll see the same thing too. 2016, 15, all that. You can go back as far as you want. But what people don't understand is that within a year, even in I think since I started trading in 2013, the worst year we had was 2015. Okay. And even in that year, the market still gave us 3 times when it hit absolute bottom. And this is what I call absolute bottoms. When the stochastic on the daily chart, okay, on the daily chart hits absolute bottom. Okay. When those occur, if you do not pay attention to that, you will miss out on huge market bottoms. It's as simple as that. So when we start talking about how to identify market bottoms, now understand patterns is great. Candlesticks are great. Don't get me wrong. I'm not even going to go into the candlesticks. It's just simply looking at the indicator called stochastic indicator and seeing how many times it actually hits bottom. If you look right here, like I said, 7 times, the only time when it actually faltered was really this right here. Okay. That was the only time, which was this rally right here. Okay. So that means that if you got into this bottom down here, that would have given you this bottom right here. If you got into this bottom down here, you would have got in down here. If you got into this one down here, you would have got in down here. If you got in down here, that would have got you in over here. And it was the only one that did not work out. Next one was down here. That would have got you in down there. This one would have got you in down here. It would have got you right here. And then look at what just happened recently right here. And that would have got you in right there. Okay. Again, out of the 7 times, 6 times out of those 7 times, you would have been profitable. Do you guys see where I'm coming from? You would have been profitable 6 times out of those 7 times identifying the bottom. Now, is this, and this is where I say it's more like, it's not the strategy, because again, stochastic, bottoms is not, something brand new, so to speak, but it's having the patience to actually just zoom out and see that, wait a second, this occurs over and over and over and over and over again. Okay. This was 2018. Let's go to 2017. Okay. And again, the concept here is, just imagine if all you did was trade when we had those stochastic bottoms. When market hit the bottom based on stochastic and you just traded on those times, 7 times in a 12-month period is almost like once every 2 months. And this is where people think, oh my gosh, I cannot wait 2 months. I can't wait 2 months to trade. But then one of the things I always challenge people is, tell me how you did by the end of the day. For those who are trading every single day, tell me how well you did. And let's compare that to somebody who only traded 7 times in the last 12 months. And out of those 7, 6 of them were spot on. Okay. 6 of them were spot on. Only 1 of them did not work. And you will see that, hey, most people looking back now, if they look at their portfolio, it's like, yeah, you know what? In hindsight, it probably would have been better if I just traded those 6 times and that's it. I would have more money in my portfolio right now than trying to trade every single day. Okay. And that's kind of like one of the things that you have to begin seeing. It's like, wait a second, it's not hard to identify market bottoms. The problem is people don't know when to look for it. Okay. And so the first step, again, looking at stochastic and just saying, hey, where are the bottoms? Right there, right there, right there, right there, right there, right there, right there. That's it. Okay. And now you'll be able to identify. So going into 2019, here's the challenge that most people will face. Oh, well, it did it last year. It did it before, but is it going to do it again now? And if you look at this right now, we are in the month of what? Which one didn't work out? Number 6, I believe. Or this one. This one is the one right here. This is the one that did not work out. So we had 1, 2, 3, 4, 5, 6, 7. So number 4. The 4th one is the one that did not work out. Okay. And we can see here, and what do I mean by it didn't work out? If you look at this, when stochastic leaves that bottom, what does it do? It makes its way all the way to the top. Okay, it leaves the bottom, makes its way all the way to the top. You guys see this? Leaves the bottom, makes its way what? All the way to the top. This is the only one that did not make its way to the top, and that's why I said it failed. Look at this one right here, made its way to the top. This one right here made its way to the top, and then this one right here made its way right now. This is literally what we're dealing with right now, back to the top. Okay, and that's why I said this is the only one that failed. Okay, again, out of the 7 times, 6 of them would have worked. That means approximately on average, once every 2 months, you had a golden opportunity to catch the bottom of the market. I mean, knowing that type of information is like, I know that once every 2 months, I have a golden opportunity to catch the bottom of the market. That's huge. Let's go back to 2017 just so I can show you that this is not something I made up. Okay. Wrong one. Just go 5 years here. So let's just go 2017 to 2018. Here we go. Okay. So that's 2017 to 2018. Here we go. We had 1 right here. We had 2 right here. 3 right here. And then we had 4 and 5. Okay. So 2017 didn't really give us as much. But like I said, there was only one where it was only 3. That was the least. Let's look at this. This bottom right here was this right here. This bottom right here was this one right there. This bottom right here was this one right here. Matter of fact, I will probably, I'm tempted to include this one. Just go with it. Okay. So we had this bottom right here, which is this one right here. This is one that didn't work. This bottom right here was this right there. Okay. So the question now becomes, hey, if you see stochastic hit the bottom, why would you not be prepared for a market bottom getting ready to rally? Okay. If you looked at I don't want to go into too many different strategies on how to trade this. But again, from whether you buy the stock to if you wanted to do a put credit spread, or you want to sell a put, or some kind of like option type of, strategy that is putting time on your side, is it possible to do some type of put credit spread or sell puts right there, only to see this go up like that, or to do the same thing right here, or to do the same thing right there, to do the same thing right here, or even any of these right here? Okay. Could you do some type of put credit spread, sell some credit, some puts, put options, and just see how the market would actually, how you'll be able to take advantage of this market? But that's just, again, the concept of just like, hey, have we hit bottom? And then if you notice, the market didn't really drop as much. So it was hard to figure out, hey, where's the market bottom? Because we didn't really get too much of a drop in 2017. But the very few drops that it had when this happened and this happened and this drop took place, it was able to help you capture those drops. Does that make sense? Please give me a Y if this makes sense to you. If it doesn't, please give me an N. Please give me a Y if this makes sense to you. Give me an N if it doesn't. Okay? Excellent. Great. All right. So what we're doing here now is, again, just using stochastic to help us understand what's going on. Now, some of you might be looking at this and saying, well, okay, at what point in time do we enter? Okay. At what point in time do we enter? Because we had all this sitting down over here, or like even this one right here. Look at how long it took before we had to enter that trade. How do we know when it's time to enter? Okay, so it's a very simple rule, and that is this. Once stochastic dips underneath this bottom line, that should be your alert to tell you, hey, we're about to hit market bottoms again. Okay. Once it hits, I mean, can you imagine all the news that was coming out when this happened? Did you guys remember this at all? Does anybody recall what happened in December when everybody's crying, hey, this market is better getting, I won't lie, even I was like that. I was like, this is looking bad. I mean, it was the first time that I actually started shorting because usually I don't short in a bull market. I simply wait until I see something like this happening. But this time around, I actually took the short in November, December. I was like, man, this is not looking good. The market looks like it's, turned into a bear market. Okay. But at the same time, I could not ignore the fact that this was beginning to happen. And so what I'm looking for is I want to see stochastic, the green line, which is the stochastic K. And for those of you guys who might be looking and say, what's your setting? The setting that I use is a very simple setting. It's a 12-3. If you have a stochastic indicator on another platform that requires 3 different inputs, it would be 12-3-3. Okay, 12-3-3. So if it's the only one that needs 2, is a 12-3. If it's the one that needs 3 inputs, 12-3-3. It's as simple as that. So what I'm saying now is when market comes down and it gets underneath this level, okay, which is oversold, like everybody says, all that stuff, I wait to see stochastic not only cross the green crossing the red, that's the K crossing the D, but then I want to see come out of that oversold territory. Make sense? I want to see not only go underneath that, cross, but come out of that territory. It's as simple as that. Okay. Once that happens, then I know the stock is getting ready to go higher. Make sense? Now, in addition to all this, one of the other things that you also want to make sure that you are doing is you want to make sure that you can add a moving average to this. Okay. You want to make sure you add a moving average to this to kind of help you with the process. Now, the moving average that you can add to this is a 8 exponential moving average. Okay. Nothing too fancy about that. Again, a lot of people know about this, but it's now combining this information together. Okay. Combining those information together, where one of the things you can now say is, hey, look, once stochastic comes down here, I know we're at the bottom. I can either wait until stochastic crosses above that, or if you know how to read candlestick signals, I have a course on how to, look at candlestick signals. It's a 5-step approach. If you use candlestick signals could get you in the trade early. If you don't know how to use candlestick signals, then wait until the indicator tells you to get in. So in this case, even though, excuse me, even though we dipped below and we had this crossover take place, you would have to come over here and say, hey, wait a second, price is still below the moving average, so I'm not going to do anything. Okay. But once price did this right here, you knew it was time to get into your trade. Same thing right here. When price first crossed down below here, we were somewhere down here. Notice how we were still below the moving average that whole time. It wasn't until price came out of this level, we had this right here. Yes, we had 1 day, 2 days where it kind of shook you out of the trade. Okay. But at the end of the day, what ends up happening is what? It comes back above it and you could catch that rally. Same thing happened right here. Once that crossover took place, you can see that this green candle right here was when price was now back above that moving average. You got into that trade. Here's the one that again did not work. We had this right here. And if you zoom into this, let me zoom into this one. This is where candlesticks would have helped you more than anything else. But you can see right here, price was slightly across it. But based on the rules on candlesticks, we didn't have a follow through. Okay. And follow through on the candlesticks would have helped you stay out of it. But let's just even say you got into it. No problem. Here's the thing. Let's say you got in on this candle because it's now above the moving average. Notice what happened right here. It's now back below. By the time this green crosses back below that red, you know something is wrong. Makes sense? And this is where what I mentioned earlier, where people say, oh, I know what strategy, I know how to use candlesticks, I know how to use moving averages, I know how to use stochastic and all that kind of stuff. But then they enter a trade like this. And can you imagine entering a trade like this 2 days later is going against you? And you thinking, well, it can't be going against me that quickly. Maybe it's going to come back. And then you start playing the let's wait game kind of thing. Oh, I don't want to get stopped out only to see the stock go back up again. But look at what all this is what I mean by the information is already telling you, wait a second, we're now back below the moving average. But more importantly, look at what stochastic has finally done. It has crossed back to the downside. If you're still in a trade, after stochastic tells you to get out, somebody asked me earlier, it's like, how do you, are you going to show us when it's time to get out of a trade? Well, here is one of those ways you know it's time to get out of a trade, for good or for bad. See, getting out of this trade right here, if I entered right here, which I actually did, okay, because I anticipated, I was like, oh, I'm going to jump the gun. I didn't follow my candlestick rules, so I jumped in right there. 2 days later, this is what I saw, okay, where some other people were thinking, it's excellent too, Mark. That was an evening star. You're absolutely correct. Which, again, this is where candlesticks really helps you. So if you don't understand candlesticks, it's very, very important that you understand candlesticks. Excuse me. Hold on a second. Okay, sorry about that. I didn't want to be coughing all in your ears. Hold on one second again. Ooh, sorry about that, guys. What was I saying? Yeah, so if you don't understand candlestick signals, it's very, very important that you understand candlestick signals. But again, I didn't want to make today's topic about candlestick signals, more so that I wanted you guys to see how indicators can really help you identify market bottoms. In this case, I got in right there. Live trade. I went long. Okay. 2 days later, this showed up. I was contemplating whether I should get out. As soon as I saw this, any emotions that I had was out the door. Why? Because now my system is saying, get out. Did I know that the market was going to drop like this? Absolutely not. Did I have the thought process of like, oh man, I might get kicked out and just to see the market reverse back up? I used to, but not anymore. I don't feel that way anymore. I've got to a point where I can trust my indicators instinctively. Okay. And what happens here is that even if you got in right here, at the very least, this is the day you would have been out of that trade based on your indicators. Just like Mark said, we had an evening start. Candlesticks was telling you to get out. Price is back below the moving average. But most importantly, my handy dandy stochastic indicator told us, you know what? It's time to get out. Now, was it lagging? Yes. Because, hey, you know what? If you wanted to be exact, you should have got out right there. But this is where I say, yeah, it's a lagging indicator. But when I hear people say that, that's because maybe they're thinking, oh, yeah, price has gone down for 3 days. Yes, it did go down for 3 days. But aren't you so much glad that you got out of this trade here than to be hoping and wishing and praying and seeing what happens while price is still doing all this? So the question is, would you have stayed in the trade if the doji was green? Yes, I would have. Okay. And actually, I did stay in the trade. Okay. I stayed in the trade over here. Remember, I said this is when I got out. I got out on this. Oh, you're talking about this doji right here? No, I would not. I would not have stayed in the trade if this doji, he's talking about this doji right here. And this is really not a doji, by the way. This is a spinning top. But if this is what you're referring to, if it was a green candle, no, I would not have stayed in. You know why? Because of this. That's the reason why I would not have stayed in. I had a gentleman that texted me earlier today, and he was trying to get into. You're talking about this doji right here. Oh, yeah, I was in this trade up here. Without a question, I was in this trade. I had no problem being in the trade up here. So you're talking about this one right here, right? I was in the trade. I didn't get out until this day. This is the day that I got out. Okay. And I took a loss. And I was okay taking a loss. You know why I was okay taking a loss? Because it wasn't about the profits or the loss, more so than the system telling me what's going on with the market. And at this point in time, my system had not given me any warnings that anything was wrong with the market. By the time this happened, I started seeing red flags in the sense that, hey, just like Mark said, I started seeing evening stars. I was like, oh, now I need to pay very close attention. The very next day this happened, Stochastic said, yep, this market is not headed higher anymore. And this is what I mean, that rather than feeling sad, oh my gosh, I had to take a loss. No, I was actually glad. Why was I glad? I was glad because I saw a situation where my indicators are saying, Wally, get out. Get out. Think about this as if there's a movie that I watched a while back. Now I can't even remember the movie. It was with Harrison Ford in that movie. And Sabrina, that's the name of the movie, Sabrina. And in that movie, he was this, I guess, like this, wealthy businessman, and his chauffeur would drive him around and everything. And long story short, the chauffeur, when he was about to retire, he gave his daughter like $1 million. And his daughter was shocked. It's like, Dad, you've been a driver all your life. How in the world did you even save enough money to have $1 million? That's impossible. And his whole thing is like, yeah, I was a driver, but don't think I was a dumb driver, because I got to hear every single stock, every single company, Harrison Ford's character was purchasing and selling. Like every time he bought a new company, he talked about it in the car, and so he just paid attention while he was driving and say, hey, I want you to buy this stock. We're gonna be buying this stock. Buy 100,000 shares of it, 1,000,000 shares of it. And so he goes and takes the little money he has and he buys 100 shares of it, knowing that if by that afternoon Harrison Ford is like, man, that's it, the deal is over, sell everything I have in that stock, I'm not doing a deal with them anymore, he'll go back and he'll sell his shares too. So Harrison Ford's character can come in today and buy 100 million shares of a company because they know something about the company. They've done that due diligence. They know the stock is going to go up. He'll go in and buy. If 2 days later he says, the deal is fall apart, they getting out of that trade, he'll go back and he'll sell. You think that he's like feeling all bad that he had to get out of trade, or is he like, man, I'm great, I'm glad that I now am a fly on the wall that can see that the big guy is also taking his money out of the trade? That's what these indicators do for me. That's how much I trust these indicators. I trust them more than my own emotions. No matter what I'm thinking, I said, what does the indicator say? That's the common thing in my office now. What is the indicator saying? What is the indicator saying? What is the indicator saying? So I urge you guys to get to this point where you can start looking at this and saying, what is the indicator saying? What is the indicator saying? What is the indicator saying? Okay. Any questions on this? The most recent trade that we had while you're coming up with this was this right here. Okay. Price crossed above. Candlesticks told you to get in somewhere around here. You'd have been in the trade. We're now above the moving average. Makes sense? Mr. Isaac was actually, you recall when I even actually sent you an email. I said, if we do what? If we get confirmation, this was when this was happening. I said, if we get confirmation, I think I believe I sent you that email on this day right here. And do you remember that, Mr. Isaac? I don't know if you got my email. But I said, if we get confirmation tomorrow, which would be the next day, I will go along. Okay. The very next day, this is what happened. Boom. Now let's take a look at what's happening here. Candlestick reversal taking place. We've got our confirmation. Price is above the moving average. These are like the best type of setups that I like, where on the day of confirmation, we're above the moving average. And look at what Stochastic is now telling us. When Stochastic hit this bottom back here, I knew we were at the bottom. But look at what's been happening. even though I knew we're at the bottom, I couldn't take a trade because the indicators were not telling us that the reversal is beginning yet. But did I know that we're at the bottom? Yeah. How long was it going to take? I didn't know. But once I started seeing this reversal signal take place right here, I said, oh, wow, we got a reversal signal. And then stochastic is now beginning to tell us it's time to enter the trade. And now price is closing above the moving average. It was time to get into the trade. What I do know, and what I want you guys to understand, especially on the S&P 500, is that very rarely does stochastic not make it to the top. If you have 10 trades where stochastic was at the bottom, and you can go back again. I mean, I don't even have to make this up. Matter of fact, let me do that right now. Let's just go back so you guys can see this yourself. Oops, wrong one. I'm just going to go back. Okay. You can go back here and just look. 1, 2, 3, 4, 5, 6, 7, 8, 9. All right. Out of those 9, this one made it very close to the top. Didn't really make it to the top, but this one made it to the top, made it to the top. This one did not. Okay. This one made it to the top. This one did not. This one made it to the top. 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 You can do your own statistics on that. Okay. You will see how many times it makes it to the top as opposed to the times that it doesn't. So knowing that, hey, there's a better chance that it would actually make it to the top as opposed to not making it to the top. What do you believe I think when I see price at the bottom? I look at this and say, hey, market is going to make it to the top, you know, and we continue. This one made it to the top. This one did not. This one made it to the top. This one made it to the top. This one made it to the top. So when I see that the market is at the bottom, getting ready to go higher, the biggest bias I have is, hey, I'm staying in until either one or two things happens. One, the green line crosses back below red before we get to the top, or two, until it gets to the top. It's as simple as that. That's a system. And I said, until that happens, unless anything changes, you don't want to do anything. Everything outside of that is really just, you know, inputting emotions into your trading, which if your emotions and your guts helps you become a better trader, nothing wrong with that. But if your emotions and your intuitions and your guts is actually making you lose more trades, then you got to get rid of that and say, look, let me go with something that is statistically proven to work better all the time. Even if you had to take an exit, and I don't even want to call it a loss anymore. If you have to exit before your planned exit, and that's kind of like how I like to look at it, rather than say, oh, I took a loss. No, you exited the trade because the market, the indicators saw that there was problems about to arise. And so what we have here, once you get in, here was a situation where I had to make a strong decision because we had Apple. This is the day Apple came out and Apple announced things were really bad. The market dropped really big. And I'll be honest with you, I fell for that too. I'm just going to be honest with you. I fell for it. Okay. Because the news was so big. I shouldn't have listened to the news, but I did. Okay. And I fell for that. And so what ended up happening, I remember very, very well because I was looking at this and I said, okay, this is down. Okay. I said, we have kind of like an evening star. I knew that we needed to wait for confirmation. But when I looked here, I said, interesting enough that the market dropped so big. I mean, if you guys recall that, do you guys recall when that happened with Apple? It was so big. It was all over the news that I started thinking, it's kind of weird that stochastic would not cross over. I mean, it was sitting right there. But I was like, you know what? Just to be on the safe side, let me just get out because, you know, this market has been really crazy. And as soon as the very next morning, I was punished for making such a decision. It was such, yeah, exactly, Deepak. It was such negative news that it affected my decision. I mean, very rarely does news affect my decision, but this one was so negative that I'm like, oh my gosh. Okay, you know what? Let me play it safe. And that's what I was doing. I said, let me play it safe. Let me get out. I said, but the indicator is not telling me to get out yet. I'm like, you know what? Let me just be on the safe side. So I got out. Very next morning, market gapped up. When I saw this green candle by the end of the very next day, guess what I did? I jumped right back in. No question, because I knew I wasn't supposed to be out of this trade because of two reasons. One, price has never, stochastic never made it to the top yet. Two, it never even crossed. So the fact that stochastic didn't cross and stochastic never made it to the top is like, why are you out of that trade? This is what I mean by the strategy is there. And these strategies are not necessarily brand new. But for most people, it's hard for them to follow the rules. Or Mark is saying, hold on a second, let me see this. Hold on 1 second. Hold on 1 second, Mark. Is that last bottom you showed not a 5-4? Yeah, it is a 5 candle morning star. Actually, no. I'm sorry. Let me show you. Yes. So you are absolutely correct, Mark. So what Mark is talking about is this right here. Oops, what did I just do? This is what Mark is talking about. So we have a 3 candlestick morning star in the sense of this. We do not have a 4. Okay, I see now. Yes, you're absolutely correct. We do not have a 4 candlestick. We actually have a 3 and a 5 candlestick morning star. Okay. So this is a 5 candlestick morning star. This right here is a 4 candlestick morning star. Absolutely. Excellent. But not only that too, Mark, we also have a right side candle too as well. Okay. So we have a right side candle, a 3 candlestick morning star, a 5 candlestick morning star. Make sense? And we have a south hilltop pattern. So it's really 4 candlestick. If you understand my hilltop pattern, okay, which is this right here. So, oh man, I should have shown you guys this. So, for those of you guys who know me, I have a strategy I call the hilltop pattern, which allows you to see when reversals are about to take place using candlesticks. And so I've been calling it hilltop for the longest time. And I think it was right after Christmas. I don't know if this is a gift from God or what, but right after Christmas, we were driving down the road in a city called Brandon, Florida. And lo and behold, we saw a street sign that said Hilltop Road. And I was like, what? Hilltop? So I had to pull over, and it was literally right there. It was at the intersection. At that intersection, if you turned left, you'll be going to North Hilltop Road. And if you turn right, you'll be going to South Hilltop Road. And I was like, oh my gosh, because I've been trying to figure out. Mark, you remember how we were trying to find out what to call the hilltop at the bottom? And we were trying to come up with all kinds of names and stuff like that, and nothing really stuck for me. It's like, oh, what should we call the bottom one? And so when I saw that, it had North Hilltop Road. Okay, not North Hilltop Road. And then we had South Hilltop Road. And I was like, that's it. That's what I'm going to start calling it. North Hilltop Road and South Hilltop Road. Here, right here, this right here is a South Hilltop Road. Okay. That's a South Hilltop Road. If it's at the top, it will be a North Hilltop Road. So, so those are the candlesticks. We have almost 4 different candlesticks that are all showing up right when stochastic is beginning to tell us, hey, things are getting ready to go higher. Okay. If we were to look at this market right now, people are like, oh, are we at the top or the bottom? We're at the top without a question. We are at the top. This is the top. Everything up here, that's the top. This is the bottom, top, bottom. I don't like using the word overbought, oversold because it confuses people. I just say top and bottom, top and bottoms. Make sense? All right. So hopefully this makes sense to you guys. Okay. And right now we are here now. Market is now back at the top for now. Okay. But somewhere between now and March, do not be surprised when market hits bottom again. Okay. Do not be surprised when the market hits bottom again. What were the other candlestick patterns beside the hilltop and the right side candle? The morning star, we had the morning star. And the thing about the morning star is you can have up to 3 different types of morning star. You can have a 3 candlestick morning star, a 4 candlestick morning star, and a 5 candlestick morning star. Okay. You will not see a right side candle or a hilltop candle out there because these are ones that I coined myself. So it's not something, but a morning star, you can definitely see we have a bullish engulfing. You can see that out there too. All the other different types of candlestick signals you can find out there, but the hilltop and the right side you will not find because those are specific to what I discovered. Okay. So hopefully this is beginning to make sense. Let's recap just a little bit. What we're saying is it's not hard to identify market bottoms. It really, really isn't. The issue is most people are so focused on trying to make money that they miss the simple warning signs that is out there. If you would just slow down a little bit, okay, and try to, let me do something here. Hold on a second. If you just slow down a little bit and try to see the bigger picture, you will start realizing, some things that most people actually do not realize exist out there. Okay. And one of the things that I beginning to tell people is you want to be the tortoise, not the rabbit. Okay. You've ever seen the race between a tortoise and a rabbit? If you've never seen that race, let me show you guys this. Just bear with me real quickly. I'll show you this race right here. There's always this comment about how a tortoise and a rabbit, if they race together. Okay. Let me see if I can pause this for a second. Yeah. Look at this. This is a tortoise and a rabbit or a hare racing. And we all know it's faster. Look at how much it just went zoomed right past. And the tortoise is just doing, but notice what's happening to the rabbit now. What is the rabbit doing? Just pay very close attention to what the rabbit is doing. Okay. It's losing focus. Exactly. It's distracted by all the other stuff out there. It's questioning itself. What it should, what's going on here, what's going on there. And look at what the tortoise is doing. Just slow but steady winning the race. This happens over and over and over and over and over with a tortoise and a rabbit because the rabbit cannot focus. It is so distracted by so many things out there. It just simply cannot focus. And so many people are chasing so many different things. And it's like, if you just focus, you will realize that, hey, you know what? It's slow and steady, 6 times or 7 times out of a whole year to have good trades is a long time to wait for trading opportunities. But they're so much better than all the ones that people try to do on a 5-minute chart, 1-minute chart, 15-minute chart every single day. So I don't want to beat a dead horse, but hopefully you guys begin to see this. Okay. And so that's, and the same thing applies to any stock. All you want to simply do is just go to the monthly chart, the daily chart of that stock and just look a 1-year time frame. How often does it do it? And is it successful enough? Let's say we go to, I don't know, let me pick a stock. I don't know. Let me just pick this stock because this is the first one that just popped in my mind. Say we go to a stock like this and let's go to 1 year. Okay. Go to a 1-year chart. Here's the bottom, okay, which it would be somewhere right here. Here's this bottom right here, which would be this right there. Here's this bottom right here, which would be this right there. Here's this bottom right here, which would be this right here. Here's this bottom right here, which would be this right here. Here's this bottom right here, which would be something right here. And then here's this bottom right here, which was something right there. Okay. All you got to do is say, hey, is this something that is lucrative enough for me to trade? Can I actually get into a trade? If I bought the stock, would I make money? How long does it usually last? Is it truly profitable? You will find that some stocks do not correlate. So for instance, this stock right here, NUGT, okay, it doesn't really make you that much money. Because if this is this bottom right here, that's this right here. If this is this bottom right here, notice how the stock doesn't really go anywhere, it just goes flat. Okay, this goes flat. Look at this one right here, this bottom didn't really go anywhere. Okay, this one had it, but it was a 1-day spike, came back down. Okay, this was probably the only good chance you had right there. If you had this one right here, you'd be late to the party. If you had this one right here, didn't really get you anywhere. You had this one right there, it really came right back down. Same thing with this one, just turned right back down. So in a situation like this, trying to trade this instrument with stochastic is not going to be your best bet. It's not the type of stock that you want to use to do this. Make sense? So that's why I always go to a 1 year. And what you'll find is once you start understanding, certain stocks will do well with others. Like Apple is one that doesn't really work so well on the daily chart with this. Okay. We see right here, it was doing this right here. It did this right here. Actually, it did well, but recently, I should say, has not been doing really well. Okay, so from this point on right here, Apple hasn't really been doing well with stochastic at the bottom. Okay, because this is this bottom right here. This is this bottom right there. This right here would have been this, which failed. Then we had this one right here, which would this right here that fell. So you can see right now, now's not the time to be trading Apple's bottom with stochastic. Let me pause for a second. I see a couple of questions coming in. Hold on 1 second. Okay, so Mr. Isaac can say, is it right to say this is not a good time to go long considering stochastic is now at the top? Excellent. Excellent. Okay. Excellent. Let me go back to what he's saying. What he's saying is we look at the stochastic right now. And this is where a lot of people is like, hey, how do you know when it's time? Look at what stochastic is. If you go long right now, okay, if you go long right now, you should know that you're taking a big chance. Okay, you are taking a big chance and a big risk to try to go long, or unless you have some other type of strategy to go long. But to say that you're looking for market bottoms to get into a stock at the bottom, that won't be it. You're absolutely right. Now, can we trade breakouts, which is a totally different topic? Yes, you can trade breakouts. Can we trade continuation? Yes, but those are all different. But when we talk about market bottoms, trying to get in at the bottom, no. Excellent comment. Thank you so much for sharing that. Okay. And so this is where, for me, I'm not necessarily looking to initiate long positions, more so to just manage the trades that I'm already in. Because again, like Mr. Isaac, when I first told you, this is when we got in. You were there when I sent you that text message, that email. And I said, look, we get confirmation, I'm going in. Okay. This was when this happened. And then I got in over here again. I would say that I did get in over here. And the reason why I got in here was because I had got out because of that bad news on Apple. And then when I looked here and I said, no, I should have stayed in. So as soon as the very next day went back up, I jumped right back in. Okay. I wasn't afraid to jump back in again. And I'm still in those trades. All right. There's another question here. Let me see this. Do you also look at the slope of the 8 EMA with stochastic? No, I do not look at the slope. It's a simple, is it above or below? That's it. Nothing more to it than just that. It's simple. Is it above or is it below the 8 EMA? Okay. That's all I use it for. So the question is, how are you in? What did you buy? So I bought the SPXL. Okay. Here is the SPXL. This is the one that I bought. Okay. To go along. All right. So I bought this. I was in Lulu as well. Okay, so here's Lulu right here when all this took place as well. I bought TQQQ. Excuse me. Same thing. Okay. That was TQQQ. Excuse me. TNA. Same thing happening right here. Okay. The exact same things. All right. And many more, excuse me, and many more of the stocks. I have to go back and look at which ones again, but I've been in and out of, different stocks. But for the most part, these are the ones that I traded. Okay. Um, but again, it's the same concept, stochastic telling us, and this is why you can see when all this took place right here. I was looking at indicators. I'm like, wait a second, it's not telling me to get out, but the news was so negative on that day that I fell for it. And that's why when it rallied back up the very next day, I jumped right back in again. Okay. Make sense? ENDP, excuse me, is another one. Okay. EXEL was another one. Makes sense. CRE was another one. All right. And so those are some of the stocks that we got into. I got into them. Some of my other students got into those stocks too as well. All right. Does that answer your question, Moshin? All right. Great. Okay. So one more thing I want to share with you guys that kind of enhances your ability to see this bottom and say, oh, wow, this is really happening is the VIX. Okay. So this is where I want to show you guys some information about the VIX. Now, some of you guys have my VIX video. You already seen the VIX video. But I want to show you like one more thing about the VIX that is super, super important, or super cool, I should say, more than anything else, that kind of helps you with the market. Okay. I want to show you one more thing about that. And here it is. Let's go to the VIX. Using the same indicator, okay, but the opposite side. It's as simple as that. Using the same thing, but the opposite. What most people have no idea concept about is that, especially when the market is already dropping, okay? When the market is dropping and everybody's scared, the VIX spikes up. So in the previous video that I used to have on the VIX, what I would tell people is say, hey, look for the VIX to touch this top. And I still stand by that, by the way. Okay, when the VIX makes it to the top, when it touches that top, oh my gosh, like whenever the VIX touches that top, let me make that very clear. Whenever the VIX touches that top, you know the bottom is almost near, without question. Okay, if you're questioning whether the S&P, the VIX is the opposite, okay? It's the inverse, so to speak. Whenever the VIX touches the top, this top line right here, all I'm telling you right now is count the days. Start counting the days. You know this market is getting ready to reverse. Pure and simple. Okay? This is why, if you saw in the testimony that I showed you, an email that came in from a gentleman named Dan, that's the same thing that he saw. He said, wait a second. If I'm understanding this correctly, the VIX has already touched the top. We should be expecting a reversal to the downside pretty soon. Do you guys recall when he actually sent this? I believe he sent that email on the 26th, December 26th, I believe is when he sent the message. Where is December 26th? Here is December 24th. Here's December 26th right here. So on this red candle, if you guys go, for those of you guys who probably saw the testimony that I put up when I was showing you guys about the promotional, or not the promotion, but the free version that I did on Saturday, this is what he saw. He said, wait a second, if I understand you correctly, then the VIX is getting ready to go down. If the VIX is getting ready to go down, that means that the market is getting ready to go up. And I told him, I said, you are absolutely correct. You guys recall that? Okay. The reason why was because what we talk about is when the VIX gets to the top, and especially after it gets to the top, the green crosses back below red, Okay, you remember that, D Park? Thank you. Thank you for remembering that. I figured, I said, I know I covered that. It's like nobody was saying. Does anybody else recall me showing that information? Okay, thank you. Okay, I thought I was just talking to myself here for a second. Great. So what he was referring to was simply this. It's like, wait a second, when the VIX is at the top, and now the green is beginning to cross below the red. And when I say top, all he has to do sometimes is just even touch it. I mean, sometimes it doesn't even have to, you just have to come close enough. All right. But then now the green crosses back below the red. You know, we're in for the VIX to drop and market to begin rallying. Okay. Please understand that. Whenever the VIX, the market is so scary, price goes all the way to the top. And especially if it touches that green line on the top, which is the over, I just call it the top. Okay. Once it gets up here, wait to see when it starts crossing over. Once it starts doing that, then we know fear is about to leave the market. And if fear is leaving the market, then that means money is about to flow into the market. I don't like to say institutions are buying because I don't know if it's them or not. I don't like to say the hedge funds are the ones buying it because I don't know if they are buying or not. But what I can say is money is beginning to flow into the market. I look at the VIX more than anything else as a fear gauge. That's it. It's a fear gauge. So if price comes up to this top, if the VIX comes up to the top, I know it's a matter of counting when that reversal is going to take place. It's literally just sitting back and just counting when is that reversal going to take place. So the question is, do you also look at the number the VIX is at, like a certain range above 18 or a certain number? No, I don't. I don't look at the number. I just look at the indicator. That's it. Okay. That's the first thing I look for is like, where is this? The closer it is to this top level, the better. I know the reversal is very near. Like the writing is on the wall. So that was the reason why, Mr. Isaac, when you saw me send that text message, as that email to you, and I said, hey, if I get confirmation on the market, I'm going long, was because I knew that this was already taking place, just like Dan did. Okay. So that's the first thing. Give me a why if you understand this. It's a very simple concept. I try not to make it complicated. Okay. Very simple concept. Mr. Isaac, you said is the reverse the case for is the reverse the case for a reversal to the downward? No. So I'm gonna show you, and that's part of the new information I wanted to show you guys today. Okay, show you guys something here. Like I said, you guys are in for a treat. Okay, so that's the first thing, is understanding when the market is beginning to show us signs that we're at the bottom. So I want you guys to start thinking about it this way. I'm looking at the stochastic on the daily chart on the S&P. Now, this applies to the major markets, not necessarily to individual stocks. So please understand that. So, because the VIX relates to the S&P 500, not to Apple or Netflix or anything like that. Okay. Walter said you no longer use the Stoch 8317.1. I'm not sure what you mean by that. 8317.1 on the low to pick bottoms. What do you mean by that? Can't wait for Walter to respond back. Okay. So what we're looking for here. So from the class that you took, these were the settings that I gave you. Let me double check that. I don't believe it was for the. stochastic. Let me double check that with you, okay? Um, email me and let me know because not for the VIX, okay? Not for the VIX. So it might be for something else, but not for the VIX. But let me just double check that because I don't recall those numbers per se, okay? All right. So what am I saying here? So now that we know that the VIX is at the top, we can start expecting price to come down. So what I want you guys to be thinking about is when this S&P is at the bottom of stochastic, I want you guys to come over to the VIX and say, where is the VIX in relation to all this? Because if the VIX is at the top, okay, if the VIX is at the top, then chances are getting higher that we'll have that bottom. Make sense? Chances are higher if the stochastic is at the bottom on the S&P 500 and you come to the VIX and the VIX is now at the top, we have a very high probability that the bottom has been set. Okay. And you don't see that too often again. But when that happens, you want to pay very close attention to it. Make sense? The next thing, now here's where some of this new information comes in. The next thing is, before I just focused on the indicator. Now I'm beginning to focus on the candlesticks as well. And what I notice is that almost always after it gets to that top, you will find some type of long wick at the top. Okay. Once you start seeing these long wicks, okay, those are usually signs that that reversal is about to take place. Once you start seeing those, so that's something that I pay very close attention to now. Whereas before I wasn't paying attention to that. But once I start seeing these long wicks at the top, I said, oh my goodness, okay, this reversal is getting closer and closer and closer and closer. So if you look right here on this one, we didn't get that long wick at the top. But what happened the very next day? We started seeing that long wick again. Once you start seeing those long wicks, it's almost inevitable that VIX starts turning downwards and the market has hit bottom, getting ready to go higher. Make sense? Okay. So now, once you understand that, so somebody asked the question, do you use this VIX setup to help you decide when to go? Absolutely, I use this VIX to help me decide when I want to go long. Without a question. Without a question. Okay. I use this to help me decide when I want to go long. Okay. Especially when you start seeing it making it back to the top. Okay. When the VIX starts making it back to the top, to not pay attention to that is giving away golden opportunities. Make sense? And this is that slow and steady right there. This is that slow and steady. Now, if you notice, it doesn't always make it to the top. So sometimes I don't mind getting in when I see that it's close enough to the top. Anything over 60, 65, I'm okay with that. Okay. So something like this, maybe even this one. This one I probably would not be so interested in. This one I definitely won't be interested in that one. But this for sure, this one would definitely be there. This one, questionable. These right here, nah, not necessarily interested in those. Okay. Makes sense? But the closer they are to the top, the more excited I am. And then if I start seeing those wicks at the top, those long wicks at the top, long wicks. Once those long wicks starts appearing, then I know, yes, we are within days of the reversal taking place. Okay, we're within days of the reversal taking place. Make sense? All right. Now, one more thing, and this is totally new. I'm going to show you guys, and then we'll wrap it up. Is well, actually, before I go there, I see a comment says there was a divergence on the stock in October, November with the wicks of those same months. This right here. Yes. Now I don't look at divergence on this. I know what you're talking about. We're looking at this right here and saying this right here. No, that's not what I use it for. Um, by all means, if you want to research that and see whether that adds to it, no problem with that. Okay. But I don't necessarily um, focus on divergence. Again, the biggest thing I do is how close are we to the top to kind of tell me whether this is really a bottom that we beginning to put in. And I want to see whether or not I have some long wicks taking place. Okay. The other side is kind of like what Mr. Isaac mentioned, which is, I believe he was asking, what's the reversal? How can you tell when we are at the top of a market and it's ready to come down? Okay. So for that, you have to do something slightly different. Okay. What you have to do is now go here, and I want you to do is change this to 27, change this one to 10. And what I want you guys to do is change this to Wilders. Okay. Now, picking the top is not as easy as picking the bottom. Okay. And I think that happens for various reasons. Part of it is, I believe, the market trends higher. Market stays in a bullish condition longer than it does a bearish condition, pure and simple. Okay. So it's harder. Like, it's easier for the market to drop and then bounce back up, as opposed to like it rallies and it drops back down again. It can rally and kind of stay there and just linger and linger as it goes higher and higher and higher. Whereas with a drop, it's very common to see it drop and then bounce back. Like, that's why they call it a dead cat bounce, Okay. It just drops and bounces right back up, drops, bounces right back up. When it goes up, it can literally just keep on going higher or kind of stall or slow down in momentum and just keep on gradually going higher. So it's a little harder to pick the tops than it is the bottoms. Okay. However, this is the closest that I've come to find as far as like identifying the tops. And what it is very simple. When the green crosses back above red, you will see that volatility spikes. When green crosses above red, doesn't happen all the time, volatility spikes. When green crosses above red, volatility spikes. When green crosses above red, volatility spikes. Those spike in volatility is basically the drops that we see in the market. Even this right here, volatility spikes. You guys see that? So when the VIX, if you're looking to see, so right now, as much as I want the market to put in a top, when I come over here and I see how far away this are from each other, I'm like, okay, as much as I want a drop to take place, this is not happening anytime soon. Pure and simple. Make sense? It's not happening anytime soon. As much as I want this market to drop and go down the drain, so to speak, I can look at this and say, okay, don't get your hopes up high. But if we were to have this green cross back above red, when everybody might still be sitting out there wondering, when did the drop really start taking place this year, this quarter? Wasn't it in October, beginning of October? Look at that. That was that initial drop. Then we had a major drop again in December, correct? Look at that. Okay. If you had known these information, these are things that would have helped you with your trading. I know people that made so much money all year long and lost it all by October. Like literally, 9 months of profits, poof, gone in the month of October. By December, they were upside down. Okay. Don't let that be you, please. There's a lot to this. Again, look, what indicators did I use? Stochastic. So when somebody comes to me, hopefully you guys can see now, when somebody comes to me and say, oh, stochastic is a lagging indicator. Yes, it is lagging indicator. I don't expect it to lead price, but you're using it incorrectly. It's not supposed to do anything but just give you an idea of what's going on. Even if it's lagging by 2 days and you get out of that trade in 2 days. Okay, again, the key is not, oh, I'm so happy because I'm making money. I'm so depressed because I lost money. I'm telling you right now, if that's the way you are, then there's a lot of improvement that needs to be made as a trader, because it doesn't matter what your strategy is, you will lose focus like the rabbit is losing focus, and you won't win this race. The key is to be excited that you have a system that can get you into the trade more often with a profit than not. And even when it gets you out, be excited about that, because you say, hey, my system got me out of that trade before it became too bad, before it became too dangerous. Make sense? And that's as simple as it is. So that is what I wanted to show you guys. And what you guys have done for me, again, like I said, I do appreciate you guys being on the call, is you've allowed me to update some of my videos. Now, I will tell you this. I mean, this is just, the tip of the iceberg. There's a whole lot more. And I want to invite you. I'm going to be doing another video. And this is what I'm going to do. For those of you guys who want to take advantage, this is where I'm going to invite you guys to come join me. I believe on Thursday, this Thursday coming up at 8 p.m. I'm actually going to be doing another video where I go into more details about using the stochastic indicators, but not necessarily just for tops and bottoms, but for other traded trades. So talking about breakouts. So right now we only talked about market bottoms. I'm going to be doing one on breakouts, and I'm also going to be doing one on divergence. Okay, so I think Deepak was the one that mentioned divergence earlier. I'm going to show you how to use divergence. If you've ever known the power of divergence, now I'm going to show you guys how to use this, with the stochastic indicator. Okay, so I want to invite you to that. Again, it's to help me put my new videos for 2019 together, because I'm going to be getting rid of all my old videos, and these are going to be the new ones. It'll be this Thursday night, 8 p.m., same as we're doing right now, but it would just start at 8 p.m. We'll go for like about a couple of hours, so it'll be like 8 p.m. Eastern time to 9. If you can't make it, the recording will be available just like this recording would be. Okay. And I highly encourage you guys to come join us then. Okay. So I know there's not enough time because I didn't give you guys heads up, but at least I would like to invite you guys to it. I'd like to see you guys on there. Let's go to SPX. Take this off. Actually, let's just edit this. Let's go back to our regular 12, 3. Are we at the top or the bottom? Now, what we're dealing with here, we're at the top, exactly. The question is this a breakout that will succeed or not? And this is what I mean by, come Thursday, I'll be, more information about how to trade the breakouts, how to trade divergences. Some of you guys probably know about the regular divergence. Most people have no idea what is called a hidden divergence. Okay. And then again, it's all about how to use this information the right way. But and that stochastic, again, there's a lot more to it than just this. But at least this would allow you to see bottoms. Okay, we'll take it to another step further by showing you how this amazing indicator can do wonders for your trading. Okay, so I hope you guys are able to make it. Okay. That is correct, Deepak. So let me send you an email on that, okay? And I would definitely help you with that, okay? I will send you an email with that. Make sense? All right. Any questions before we call it a day? Absolutely, better. Absolutely. Any questions before we call it a day? Okay. So once again, I hope this information really helps you with your trading. put it to practice. You make lots of money off of it. If you would like to join me on Thursday evening, be more than glad to do so. Um, could I cover any candlestick patterns before we end? Today was not necessarily about trying to cover candlesticks, okay, and that's a whole, it's a whole different topic, okay. In the future, I'm going to be redoing my candlestick videos as well, so maybe when I put out be paying attention to some of the emails when we put out a promotion to come join us for our candlesticks. Maybe try to join that one, and then we'll talk about candlesticks because I think it's a totally you know separate um, course, so to speak. Okay, on how to read candlesticks. Is there a VIX video? Yes, we do have an old one. I can send you the old one, Motion. But again, what you have here, which you will have a recording, this one is going to be much better than the old one. Okay, so just wait for the replay of this. You will have a copy of this replay, and that's all you really need. It's like, because what I'm going to do is I'm going to actually take out the section. I'm going to take out the section on the VIX of this, and that's going to be my new VIX video. Okay, so you will have, this one is more updated as far as the VIX video is concerned than the old one. Okay, so but yes, this is more updated. There's more information on what I covered with you today on the VIX than what I had in the previous one. Does that make sense? We should have the recording ready for you guys to go by tomorrow. So depending on how long it takes to render it, you might even have it tonight if I'm still up to be able to send that over to you. But definitely by tomorrow you should have the recording. God willing, tomorrow you should have the recording. Okay. Any other questions? Okay, so that's pretty much it. Well, thank you so much, everybody, for being on the call. I hope you have a blessed day. And again, if you have any questions, feel free to contact us, info@rightside.trading.com. If not, I look forward to seeing you guys on Thursday. And if that's something you don't need, that's fine too. We'll be in touch going forward. Okay, take care, everybody. God bless you all. Good night.